Meanwhile, it seems that there is no end to the economic woes for Asia's third largest economy, India. Its currency, the rupee, hit an all-time low against the dollar yesterday, slipping to 76.97 before rebounding following a possible intervention by the central bank, that is the Reserve Bank of India or RBI. The rupee's weakness was a result of a stronger dollar, which is currently hovering around 20 years of a high level, and a sharp fall in the US equities, the US Treasury yields, and also moving up with investors rushing for safe haven assets, resulting in the strengthening of the dollar. As the world markets got spooked due to a forecast of 10% inflation by the Bank of England, the dollar index rose from 102.5 to 104.06, and Asian currencies were all down against the dollar this week. India is also battling high crude prices, which have jumped after the Russia-Ukraine war began in February, adding pressure on the rupee as the country imports more than 80% of its oil requirement. But it is not just the costly crude and high inflation. The country's foreign exchange reserves have also dropped to $598 billion for the week ended April 29th, down from its all-time high of $642 billion in the week ended September 3rd. That is in 2021. The central bank, the RBI, is already using its reserves as ammunition to arrest the rupee fall, which is leading to a dip in foreign exchange as well. So far in 2022, India's foreign exchange reserves have eroded by $36 billion, with the trade deficit widening. Analysts now predict that the country is heading for a double-digit deficit in the balance of payments for the current financial year, which is a negative for the Indian unit. Meanwhile, the continuously falling Indian stock markets nosedived yesterday as well, with the Sensex closing below the 55,000 mark amid a sell-off in global markets. WION World is now available in your country. Download the app now and get all the news updates on the move.